It's Tuesday and the major U.S. stock averages are trading flat. Earlier in the session, we saw the Nasdaq hit another intraday high, but for now, we are seeing flat trading. Joining me now is Valdes of SilverBear Capital. Alan, thanks for joining me.
Thanks for having me, Remy.
Well, here we are on this Tuesday. May has kicked off, and a lot of overseas markets are returning from the Labor Day holiday. But for the most part, here in the U.S., as the two-day Fed meeting kicks off, we're seeing flat trading for the equity averages. What's going on?
Well, that's average. We're going to wait to hear the wording tomorrow and see what she has to say. But nothing's going to be exciting. They're not going to do anything, really. A lot of it's just, like you said, May Day yesterday. We were open but essentially closed. We were under 300,000 in total volume. Right now we're at 232 million. To 300 million yesterday. So we're doing a little better today, but still very quiet.
And speaking of the Federal Reserve, after the two-day meeting, we won't be getting a press conference, and there are no expectations of a rate change, but we might get some comments about how the central bank expects to unwind its balance sheet. But we'll also be getting jobs report at the end of this week, and we do have a handful of important earnings that we're watching. So do you see those risk events affecting the market overall?
No, because earnings have been good. Out of, I think, about 350 companies that have reported already. About 70% have beat on the top. On the bottom line, about 62%. So overall, it's been a pretty strong earnings season. As far as rate change, no, of course, no rate change. Jobs number, that always has potential to move the market, but I think jobs will be in line for what they're looking right now. I don't see any major shocks coming down. I think if we're going to see any shocks this summer, it'll be geopolitical more than government data or U.S. data. So I think we'll keep an eye on that and see what happens there. But overall, there was an old saying down here, sell in May, go away. I don't think you're going to see that this year. There's too much money here, too much competition for that commission dollar, too. So I don't think you'll see people going away in May like they used to do, go to their houses in the Hamptons or the Jersey Shore, like you do, fly out there in your helicopter. But I think for the most part, people are going to stay here and work all summer long.
And Alan, as we head into the summer months, we'll be paying attention to what U.S. President Donald Trump says. And we did get some very interesting comments in the past 24 hours. Yesterday, he said that he is currently looking into breaking up banks. And now that the potential of a government shutdown, at least for this fiscal year, has been averted, he said that it wouldn't be altogether a bad thing if a shutdown did happen after September 30th. But how much credence are you lending to these comments?
He says a lot of things. Let's be honest with this president. But I don't put too much credence in it. It's a soundbite. It's out there. He loves to get his sound bites out there. I don't think we'll see a government shutdown at all this year or even the first quarters next year. I think that's basically off the table. That'd be political suicide. Going into a midterm election with a new president to shut down the government, it's not going to happen. The bank breakup, that's got to run through Congress, too. And this Congress, even though it's controlled by Republicans, they're really not working with this president too much. So I don't think that is top priority. I think he's got to focus on taxes and the health care. Those are going to be the main things. Remember, Congress goes on vacation. These guys, they have some job. They go on vacation in a few weeks, I think Memorial Day, and they're gone till Labor Day. So nothing's going to get done this summer.
And because you mentioned tax reform, this is the first time I'm speaking with you since Trump unveiled his one-pager for the tax reform proposal. But how much of that do you think we'll actually see going into effect anytime soon?
Well, I don't think you'll see 15% corporate rate. It would be great. But I think more 20, 22% in that range, which is still big. For every 1%, it adds like $1.32 to your earnings. So, it's huge. A company like Berkshire, if he would have cut back to 15%, that would add $32 billion to their market cap. So, it's a real number, but I don't think you'll get it that low, only because, 10 years from now, you'll be $10 trillion in debt. So, it's not going to work right now, I don't think.
Okay, Alan. Well, thank you so much for joining me today, and thanks for your insight as always.
Thanks for having me, Remy.